The path to achieving financial independence. Chapter 1. Defining financial independence. Financial independence refers to the condition of possessing adequate personal wealth to live comfortably without relying on a salary. In more straightforward terms, it signifies a situation where your assets produce sufficient income to sustain your lifestyle without the necessity of active employment. Financial independence empowers individuals to follow their passions, undertake calculated risks, and relish life free from financial anxiety. It does not revolve around wealth accumulation or the ownership of extravagant vehicles and estates. Rather, it focuses on having authority over your financial situation, the capacity to make decisions, and living life according to your own preferences. For some, this may entail retiring ahead of schedule. For others, it could involve exploring the globe, launching a dream venture, or dedicating more time to family. Genuine financial independence is a combination of mindset, strategic planning, and disciplined implementation. Chapter 2. The Psychology of Money and Wealth. Our connection with money is profoundly influenced by our upbringing, cultural background, and personal experiences. Financial choices are frequently swayed by emotions rather than rational thought. Gaining insight into the psychology of money can lead to improved financial decision-making. Emotions such as fear, greed, guilt, and pride significantly impact financial behavior. Some individuals experience anxiety when it comes to spending money, while others may overspend in search of approval. Identifying these behavioral patterns enables the adoption of a more constructive money mindset. The journey to building wealth begins with self-awareness. Shifting your mindset from "I can't afford this" to "How can I afford this?" creates new avenues for creativity. Maintaining a positive and proactive approach to money is crucial. Chapter 3. Common misconceptions regarding financial freedom. One must be wealthy to attain freedom. Financial freedom revolves around effective money management rather than merely possessing a high income. Financial freedom is exclusively for the elderly. With an appropriate strategy, even younger generations can realize it at an early stage. All debt is detrimental. Thoughtful debt, such as mortgages or business loans, can prove advantageous. Investing is excessively hazardous. Informed investing mitigates risk and enhances returns. Budgeting equates to sacrifice. Budgeting enables purposeful spending rather than self-denial. Dispelling these misconceptions paves the way for a realistic journey towards financial freedom. Chapter 4. The Financial Freedom Mindset. The initial and most vital step is a shift in mindset. Individuals who attain financial freedom typically exhibit the following key characteristics. Discipline. They adhere to budgets and pursue long-term objectives. Patience. Wealth accumulation occurs gradually, rather than instantaneously. Confidence. They have faith in their knowledge and decision-making abilities. Curiosity. They are committed to lifelong learning in the realm of personal finance. Resilience. They possess the ability to bounce back from challenges. Cultivate a mindset that emphasizes possibilities instead of obstacles. Regularly visualize your objectives and engage in consistent actions towards achieving them. Chapter 5. Income versus Wealth. Understanding the distinction. Numerous individuals mistakenly equate a high income with true wealth. Income refers to the money you receive, whereas wealth pertains to the assets you retain and expand. It is possible to have a significant salary yet still find yourself living from one paycheck to the next, or conversely, to have a modest income and accumulate considerable wealth through prudent saving and investing. Genuine wealth is assessed by net worth rather than income. Regularly monitoring your assets and liabilities is essential for grasping your financial standing. The objective is to enhance your assets while minimizing your liabilities over time. Concentrate on wealth accumulation rather than merely increasing your earnings. Chapter 6. Budgeting for Freedom. A budget serves as your financial blueprint. It assigns a purpose to every rupee or dollar and ensures that you are living within your means. Budgeting is not merely about limitations, it is fundamentally about exercising control. Begin with the following steps. Monitor your income and expenditures. Classify your spending into categories: necessities, desires, savings, and debt repayments. Consider employing the 50-30-20 rule or a zero-based budgeting method. Utilizing digital tools and applications can simplify the budgeting process and enhance its accuracy. Conduct a monthly review of your budget and make adjustments as necessary. Maintaining consistency is essential for effective budgeting. Chapter 7. Emergency Funds and Financial Safety Nets. An emergency fund serves as a financial safeguard during challenging times. In situations such as job loss, medical bills, or unexpected repairs, having savings equivalent to 3 to 6 months of living expenses can help avoid debt and alleviate stress. Key recommendations: maintain the fund in a liquid, easily accessible account. Begin with a small amount and gradually increase it. Consider it a non-negotiable priority. Additional safety nets encompass insurance, health, life, accident, and contingency planning. Assurance comes from being well prepared. Chapter 8. Debt Management and Elimination. Debt can pose a significant barrier to achieving financial independence. While not all debt is detrimental, it is crucial to address high-interest consumer debt with urgency. Strategies for managing and eliminating debt include: debt snowball. Focus on paying off the smallest debts first to build momentum. Debt avalanche. Prioritize paying off debts with the highest interest rates to save money in the long run. Debt consolidation. Merge multiple debts to reduce interest rates and streamline payments. Negotiate. Reach out to creditors to request lower interest rates or settlements. During the repayment phase, it is essential to refrain from incurring new debt. The objective is to transition from being a borrower to becoming a saver and an investor. Chapter 9. Diverse Income Streams. Depending solely on one source of income poses a risk. Having multiple income streams enhances security, boosts savings, and hastens the journey to financial independence. Types of income include: active income, generated from your employment or business activities. Passive income, revenue derived from investments, rental properties, and royalties. Portfolio income, earnings from dividends, stocks, and mutual funds. Side hustles, activities such as freelancing, e-commerce, tutoring, and more. Develop income streams that correspond with your skills and passions. Even a modest side income can grow substantially over time. Chapter 10. Fundamentals of Investment. Investment is crucial for generating wealth. In contrast to saving, investing allows your money to increase over time by outpacing inflation. Categories of investments: stocks, equity in businesses. Bonds, providing loans to governments or corporations. Mutual funds, collective investments overseen by experts. Real estate, properties intended for rental income or value appreciation. Gold and commodities, safeguards against inflation. Essential principles: begin early. Diversify your portfolio. Invest regularly. Concentrate on long-term objectives. Assess your risk tolerance and financial aspirations prior to making investments. Chapter 11. Stock Market, Real Estate, and Mutual Funds. The following are the three most widely recognized means of accumulating wealth. Stock market provides significant growth opportunities. Demands understanding and patience. Best suited for long-term investors. Real estate produces rental income and increases in property value. Requires a larger investment and ongoing maintenance. Mutual funds, ideal for novices. Offers professional management and diversification with reduced risk. Each option has its advantages and disadvantages. A well-rounded portfolio typically incorporates a combination of all three, tailored to your age, risk appetite, and financial objectives. Chapter 13. Intelligent Tax Strategy. Taxes can have a profound effect on wealth accumulation. Strategic tax planning allows you to retain a larger portion of your earnings. Suggestions. Optimize deductions and exemptions. Utilize retirement and insurance products for tax advantages. Invest in tax-efficient mutual funds, ELSS. Maintain documentation for all qualifying expenses. Seek advice from a financial consultant or tax strategist to ensure compliance and efficiency. Keep in mind, tax planning is lawful, tax evasion is illegal. Chapter 14. Safeguarding Wealth with Insurance. Accumulating wealth is significant, yet its protection is crucial. Insurance serves to shield your assets and maintain financial security. Categories of vital insurance. Health insurance addresses medical emergencies. Life insurance offers financial assistance to beneficiaries. Disability insurance secures income in the event of injury or illness. Home and vehicle insurance protects property and liability. Sufficient insurance guarantees that unexpected occurrences do not disrupt your financial path. Chapter 15. Intelligent Expenditure and Economical Living. Exercising financial prudence does not equate to self-denial. It involves ensuring that your expenditures reflect your principles and aspirations. Guidelines for intelligent expenditure. Emphasize necessities rather than desires. Engage in conscious consumption. Steer clear of spontaneous purchases. Utilize cashback incentives and discounts judiciously. Economical living is not synonymous with being miserly, it focuses on enhancing value. Channel savings towards investments and objectives. Chapter 16. Long-term planning, retirement and legacy. Achieving financial freedom requires comprehensive long-term planning. Effective planning steps include retirement planning. Assess your needs after retirement and make appropriate investments. Pension schemes. Investigate options such as EPF, NPS, and annuity plans. Estate planning. Draft a will and designate beneficiaries. Legacy building. Transmit not only financial assets but also values and knowledge. Initiate your planning today to ensure peace of mind in the future. Chapter 17. Technology and Financial Tools. Utilize digital resources to enhance your financial management. Budgeting applications, YNAB, Mint, Good Budget. Investment platforms, Zerodha, Grow, Robinhood. Expense tracking tools, Spendy, Money Manager. Goal planning tools, Excel spreadsheets, Trello boards. Automation minimizes human error and improves consistency in financial management. Chapter 18. Overcoming Financial Setbacks. Life is full of uncertainties, and encountering setbacks is a part of the journey. The essential approach is to react with resilience. Strategies for recovery. Avoid panic. Evaluate the circumstances with a clear mind. Eliminate superfluous expenses. Chapter 19. Embracing a lifestyle of financial restraint and finding joy in it. Achieving financial independence does not imply that one should indulge in lavish expenditures. The majority of individuals who have attained financial freedom through their own efforts continue to live within their means, as they recognize the importance of money. Suggestions for enjoying life while maintaining frugality. Concentrate on experiences rather than possessions. Prioritize quality over quantity. Implement budgeting strategies for guilt-free expenditures. Surround yourself with a community of like-minded individuals. Financial independence is not synonymous with limitations. It is about making choices that align with your core values. Chapter 20. The FIRE Movement, Financial Independence, Retire Early. The FIRE movement represents a lifestyle choice and financial approach that seeks early retirement through aggressive saving and prudent investing. Key components: saving 50-70% of one's income, minimizing living costs, investing in low-cost index funds, determining the FIRE number, 25 times annual expenses. Categories of FIRE: lean FIRE, a frugal lifestyle; fat FIRE, a more comfortable lifestyle with higher expenditures; barista FIRE, engaging in part-time work while enjoying partial retirement. Achieving FIRE necessitates discipline, careful planning, and a long-term perspective. Chapter 21. Contributing and making a difference. Achieving financial independence empowers you to effect change. Contributing to others enhances joy and establishes a lasting legacy. Methods of contribution: support causes that resonate with your values. Fund education or health care for those in need. Initiate or assist a non-profit organization. Offer your time and expertise as a volunteer. Financial independence allows for both individual benefit and positive influence on the community. Chapter 23. Concluding reflections, the continuous journey. Achieving financial freedom is not merely a goal to reach but rather an ongoing journey throughout life. You will experience personal growth, your objectives will evolve, and your strategies may require adjustments. The key is to remain vigilant, be adaptable, and continue your development. Regularly assess your objectives on an annual basis, your financial plan each month, your overall wealth every quarter, your investment portfolio consistently. Acknowledge and celebrate your achievements along the way. Maintain humility, foster a desire for knowledge, and always be open to learning. Your journey towards financial freedom can serve as a source of inspiration for others to embark on their own paths as well. The conclusion, yet just the start for you. Chapter 22. Educating the next generation on financial literacy. One of the most valuable gifts is imparting financial knowledge to children and young adults. Key topics to cover: the significance of saving and budgeting, differentiating between needs and wants, fundamentals of banking and investing, prudent use of credit. Incorporate stories, games, and real-life examples in your teaching. Financial literacy equips the next generation for success.